Welcome back to TalkTickers, where we deep dive into those earnings calls so you don't have to. And today we're looking at Honeywell, their Q3 2024 report. We've got the transcript and we've got some stock performance data. Got a lot to talk about.
Yeah, it's an interesting time for Honeywell. You know, on the surface, mixed bag, but there's a lot of moving pieces. There's a lot going on. It kind of hints at a bigger transformation.
Yeah, I think that's a really good point. And I think one of the big things right off the bat is that CFO Greg Lewis stepping down to head up Honeywell Accelerator.
Yeah.
That's got to be some big shoes to fill. What do you think? What's the read on this move?
Yeah, it's significant, right, for a couple of reasons.
Yeah.
I mean, firstly, Lewis has been with Honeywell for a while now, so his departure signals a potential shift, right? A shift in their financial strategy. And secondly, it really shines a spotlight on Honeywell Accelerator, right? Their operating system that's focused on digitalization. So this move really suggests they're doubling down on that strategy.
Yeah, it's definitely a sign that they're serious about this whole digitalization push. And it's interesting because stepping into that CFO role is Mike Steenak, who is the CFO of Aerospace Technologies, which kind of leads into my next point. Aerospace has been a consistent bright spot for Honeywell.
For sure, for sure. It's been their powerhouse, for 9 consecutive quarters now. Double-digit growth driven by strong demand in defense, space, and commercial aviation. So, yeah, Stepniak moving to the CFO position. Yeah, that could indicate that Honeywell plans to leverage his expertise there to bolster overall financial performance.
Yeah, maybe sprinkle a little bit of that aerospace magic, across the whole company. So aerospace is soaring. We got that. But the overall picture for this quarter is a little bit cloudy. They beat expectations for earnings per share, and they beat expectations for segment margin, but sales fell short. So what happened there? What do we think happened?
Well, I mean, a few things, right? I mean, some of them are external factors, like that hurricane and fire that impacted aerospace production. And then, we've also got those delays in project-based businesses. Then there's that lack of what they call short cycle improvement.
Yeah, what is that? Can you unpack that a little bit? What is short cycle improvement?
Yeah, so it refers to how quickly basically they can adjust production and sales, right, in response to changes in the market.
Oh, okay. So the lack of that means that they're having trouble adapting quickly to any shifts in demand, which makes sense given, how volatile things are right now.
Yeah.
So let's kind of break it down a little bit more. Let's unpack the performance of each segment. And obviously, we got to start with aerospace. We know it's doing well, but are there any areas of concern there?
Yeah, so the main issue is supply chain disruptions. So while demand is really strong, they're facing those bottlenecks that prevent them from fulfilling all the orders. In fact, they have a backlog of over $2 billion in aerospace alone.
Wow. So it's good and bad, right?
All right.
I mean, it's good to have the demand, but if you can't fulfill it.
Exactly.
All right, so let's move on. Now, industrial automation saw a decline this quarter, particularly in warehouse solutions and safety technologies. What's driving that decline?
So for warehouse solutions, it's just softening demand.
Right.
Companies are a bit hesitant to invest heavily right now because of all the economic uncertainty. And safety technologies market is also facing some challenges, heightened competition, shifting customer preferences. It's tough out there.
Yeah, it sounds like it. However, there is a little bit of a silver lining. The growth of aftermarket services represents almost 60% of industrial automation revenue now. What's the significance of that? What does that tell us?
Well, aftermarket services typically offer higher margins, right? And also a more consistent revenue stream compared to those one-off product sales. So while, overall sales are down, that focus on the aftermarket could lead to greater profitability in the long run.
Okay, so building a little bit more of a resilient business model within industrial automation. All right, building automation, let's talk about that. That saw a boost in sales thanks to the Access Solutions acquisition.
Yes, but it's not just the acquisition, right? I mean, they're seeing organic growth as well, especially in data centers, healthcare, and energy, which ties into what we were talking about before, right? Honeywell's focus on capitalizing on these large-scale trends. They're really positioning themselves to be key players in sectors that are expected to experience some pretty significant expansion in the coming years.
Yeah, that's a really smart move. Okay, finally, we've got energy and sustainability solutions.
Yeah.
A segment that saw, modest growth overall. But within that, UOP had a record $1 billion in orders. That's huge. What's driving that? What's going on there?
So UOP, they specialize in technologies for refining and petrochemicals, and they're really focusing now more and more on cleaner and more efficient solutions. So that record order book. That really signals a growing demand for these types of sustainable technologies, even amidst all this economic uncertainty. It seems like companies are prioritizing those long-term sustainability goals.
Yeah, and that's encouraging to see. Now, before we jump into Honeywell's broader strategic moves, their outlook for the future, I kind of want to dig a little deeper on this UOP success story. What are they doing specifically that's resonating so strongly in the market?
Well, their expertise in refining and petrochemical technologies is well established, right? But what really sets them apart now is their ability to bridge that gap between traditional energy solutions, right? And that increasing demand for sustainability. So they're offering companies ways to optimize their existing operations while reducing their environmental impact. So it's kind of, a sweet spot in the current market. And it explains why they're seeing such a surge in orders.
Yeah, I mean, it sounds like UOP is becoming a poster child for Honeywell's ability to adapt and thrive in this changing world. It's not just about reacting to these trends, it's about actively shaping the future of their industry. Now, let's kind of shift gears and talk about Honeywell's overall portfolio moves. They've been pretty active on that front.
Absolutely. They've been strategically, buying, selling businesses, trying to streamline their focus and really position themselves for future growth.
Yeah, let's delve into that a little bit more in detail. But first, a quick word from our sponsors. We'll be right back with more on Honeywell's strategic maneuvers and what it all means for you. Stay tuned.
Welcome back to TalkTickers. Before the break, we were talking about UOP and how well they're doing and those portfolio moves that Honeywell's been making. Let's dig into those strategic decisions.
Yeah, so we were talking about how they've closed 4 acquisitions already this year, totaling over $9 billion, while also, divesting some businesses. So it seems like they're playing this high-stakes game of chess with their portfolio.
Yeah.
What's the strategy here?
Well, they're very focused, right? They're laser focused on aligning their portfolio with those mega trends that we were talking about earlier. Things like automation, the future of aviation, energy transition. So each acquisition that they're making is strengthening their position in those key growth areas. Makes sense. Like, for example, you've got that Access Solutions acquisition. That boosts their building automation offerings, right? Particularly in data centers. And we all know that data centers are experiencing like explosive growth right now.
Yeah, absolutely. So it's not just about acquiring any company, it's about strategic fit. They're carefully choosing businesses that complement what they're already doing and open those doors to new opportunities.
Makes sense. What about the divestitures? They spun off their advanced materials business and sold their PPE business.
Right. And that's about shedding those non-core assets. So it's about streamlining their operations, focusing resources on those higher growth, higher margin businesses, which, allows them to be more agile, more responsive to changes in the market. Yeah, I mean, it's like they're trading in a bulky multi-tool for a sleek Swiss Army knife, just keeping the essential tools for the tasks ahead. Now, how does all this fit into Honeywell's outlook for the future? Because they've expressed some caution about the macroeconomic environment, at least in the short term.
Right. I mean, there are definitely some headwinds, right? Geopolitical tensions, potential recessions, those supply chain issues that just don't seem to want to go away. But despite all of those challenges, Honeywell is actually still pretty confident about driving growth in 2025.
Okay, so what makes them so confident?
Well, they've got that record backlog, and they're expecting organic growth across all of their segments. Plus, they've got that strategic focus on high growth areas. All of that contributes to their optimism.
So even with those challenges, they're seeing a path forward. I think their partnership with Google Cloud to leverage AI is really intriguing. How's that going to impact their offerings?
Well, I think it amplifies their already, strong position in industrial automation and data analytics. So you've got Honeywell Forge, their existing platform, and that's going to become even more powerful with the integration of Google Cloud's AI capabilities, which means they're going to be able to offer their customers, more sophisticated solutions for optimizing operations, predicting maintenance needs, improving overall efficiency.
So they're not just selling equipment anymore, they're selling intelligence.
Exactly. They're going from a hardware provider to a solutions provider, which is a really smart move, especially in today's data-driven world.
For sure. Now, we can't ignore those short-term challenges. They did mention slower than expected recovery in industrial automation and some hiccups in their process solutions business. How are they addressing those?
Well, they're adapting, right, to those shifting market dynamics. So in industrial automation, they're really zeroing in on those industries with more robust demand. And, they're developing more tailored solutions for specific customer needs. For their process solutions business, they're trying to address those project delays, streamlining their internal processes, working more closely with suppliers to try and mitigate those disruptions.
So tackling those challenges head on. They also mentioned the possibility of exceeding their organic growth target of 4% to 7% in the future. What would it take for them to actually do that?
Well, a few things would need to happen. That macroeconomic environment would need to stabilize. Those strategic bets on high growth areas would need to really start paying off. And then they just need to continue executing well, right, on their operational initiative. If those pieces all fall into place, then yeah, they have a real shot at exceeding those expectations.
Okay, so a lot of ifs, but it's definitely within the realm of possibility. It sounds like Honeywell is navigating this complex landscape. They're balancing those short-term adjustments with, their long-term ambitions. What's the key takeaway here for our listeners?
Well, Honeywell's a company in transition, facing those immediate headwinds, but they're making these really bold moves to try to position themselves for success in the future. Their focus on innovation, those strategic acquisitions, that commitment to sustainability, it all suggests that they're not just riding the wave of change, they're actually actively trying to shape it.
It's a fascinating story. Definitely going to be keeping an eye on them. But before we wrap up this deep dive, let's address the big question. What does all this mean for investors?
You know what? That's a question for another podcast, probably one that's a bit more focused on financial analysis. But what I can say is understanding the company's strategic direction, what we've been talking about today, is a crucial first step in evaluating that investment potential.
For sure, for
Yeah.
sure. Knowing the why behind a company's actions is just as important as understanding the what of their financial performance. So we always encourage our listeners, right? Do your own research, consider multiple perspectives, and make those informed investment decisions based on your own individual goals and risk tolerance.
Well said, well said. And remember, TalkTickers is here to help you navigate the complexities of these earnings calls, so be sure to tune in for our next deep dive.
So we've covered a lot of ground, huh? I mean, everything from those leadership changes and segment performance to those strategic acquisitions they've been making and, the macroeconomic outlook and all that. What are some key takeaways that our listeners should kind of walk away with?
I think the biggest one is that Honeywell's not just sitting around. They're really actively adapting to this changing world. I mean, both in terms of the markets that they serve and the technologies that they're using.
Yeah, it's clear that they're not just like reacting to trends. They're really trying to anticipate them and shape them. And, those investments they're making, those areas like sustainable technologies, AI, and data analytics, it all really shows a forward-thinking approach.
Exactly, exactly. They're betting big on the future, even while they're dealing with all those complexities of the present, right? Their willingness to make some pretty bold moves, like divesting non-core businesses and those partnerships with those big tech giants like Google, it shows real commitment to staying ahead of the curve.
Absolutely. But, as we were talking about, there are those challenges up ahead. Supply chain issues, that economic uncertainty, competition from some of those really agile startups. Those could all become hurdles in the coming months.
Oh, for sure. There are no guarantees in business, right? And Honeywell is going to have to execute really well, flawlessly, really, if they want to achieve all those ambitious goals they've set for themselves. But, their track record, their leadership team, that focus on innovation, it gives them a really solid foundation to build on.
Yeah, I think that's a good point. And, one thing that really stood out to me was that success story with UOP that really highlights that growing demand for sustainable solutions, even in those traditional industries like refining and petrochemicals.
Yeah, it's a great example. It really shows how Honeywell is kind of bridging that gap, between conventional technologies and that increasing need for sustainability and those record orders that UOP is seeing. It really shows that companies are ready to invest in those cleaner, more efficient solutions, even with all that economic uncertainty. And I think that trend's just going to keep accelerating in the years to come, which is good news for Honeywell's long-term growth.
Yeah, it seems like it. So, I mean, for investors and anyone who's just kind of interested in the future of industry, Honeywell is definitely a company to watch, right? They're not just playing the game, they're rewriting the rules.
Well said. It'll be really interesting to see what they do next. And of course, TalkTickers will be here to break it all down, provide some insights and analysis along the way. So stay tuned for more deep dives into the world of earnings calls. And until next time, happy investing.
And that's a wrap for today's show. We hope you found this deep dive into Honeywell's Q3 2024 earnings insightful and, maybe even a little bit fun. And as always, we encourage you to do your own research, draw your own conclusions. Thanks for listening.